It was a Tuesday morning in early February 2026, and inside the White House, something unprecedented was happening. President Trump sat down with executives from the cryptocurrency industry, not in a conference room, not with advisors as middlemen, but face-to-face in the Oval Office. The topic? The future of American finance. For months, a piece of legislation called the Clarity Act had been stuck in Congress. It promised to finally give the crypto industry the regulations it had been desperately asking for. But there was a problem, a big one, and it wasn't coming from politicians. It was coming from an unexpected source, America's traditional banks. Let me take you inside this story, because what's happening right now will affect every American's financial future, whether you own crypto or not. President Trump didn't mince words that morning. Speaking to reporters, he said, "I am a big crypto person. I've probably helped crypto more than anybody. I believe in it. And the reason I believe in it is because if we don't do it, China is going to do it. If we don't do crypto, China is going to do it." That statement wasn't just political rhetoric. It was a warning about economic survival. You see, for decades, the U.S. dollar has been the world's reserve currency. When countries trade oil, they use dollars. When businesses make international deals, they settle in dollars. This gives America enormous economic power. It keeps interest rates low. It makes our government debt manageable. It's the foundation of American prosperity. But that dominance is under threat, and cryptocurrency, specifically something called stablecoins, might be the key to defending it. Let me explain this simply. A stablecoin is a digital currency that's backed one-to-one by real U.S. dollars. For every digital coin out there, there's an actual dollar sitting in a bank account or U.S. Treasury bond backing it up. Why does this matter? Because stablecoins create demand for U.S. dollars in the digital age. As more people around the world use crypto, stablecoins become the bridge between traditional money and digital assets. And right now, most stablecoins are backed by U.S. dollars, not Chinese yuan, not euros, but American currency. This drives global demand for our dollar, which keeps our interest rates low and our economy strong. It's financial power for the 21st century. But there's a catch. The legislation that would regulate and legitimize this industry has been stuck. And sitting in that White House meeting was someone who could explain exactly why. Paul Grewal, Chief Legal Officer of Coinbase, America's largest cryptocurrency exchange, was one of the executives at that meeting. Later that day, he appeared on national television to explain what was really going on behind closed doors in Washington. "The White House is fully engaged," Grewal said. "Full credit to President Trump for prioritizing this, but we need Americans to understand why they should care about this at all. This is fundamentally about competitiveness. It's about preventing a future where the currency that dominates global trade is paced by the Chinese central bank. That would be a disaster." He wasn't exaggerating. China has been working on its own digital currency for years. They've made it clear they want to displace the dollar as the world's preferred currency, and they're not waiting around. So if crypto is so important, and even the president supports it, why is the legislation stuck? The answer is simple. Banks are fighting it hard. Traditional banks have launched an intense lobbying campaign against key parts of the Clarity Act. Their main target, a provision that would allow crypto platforms like Coinbase to offer rewards on stablecoins, similar to how banks offer interest on savings accounts. The bank's argument goes like this. If crypto platforms can pay people rewards on their digital dollars, billions of dollars will flow out of traditional bank deposits and into crypto platforms. This would destabilize community banks and hurt the financial system. Grewal had a different perspective. Bank lobbyists have done a masterful job of confusing the American people and leaders on both sides of the aisle, he said bluntly. There's no evidence that crypto draws demand for community bank deposits away.
In fact, crypto supports the financial system by supporting the strength of the US dollar. He pointed out something striking. There's over $3 trillion parked at the Federal Reserve right now, just sitting there, earning nothing for everyday Americans. He argued that capital could be put to work for the American people. Instead, we're having false concerns created by lobbyists who represent banking interests.
But banks had a point too. They argued that crypto companies want it both ways. They want to act like banks, offering deposit accounts and paying interest, but they don't want to follow the same strict regulations that banks face. Banks have to maintain deposit insurance. They face strict capital requirements. They're examined regularly by federal regulators. They have to make loans to their communities. These rules exist because banks hold people's life savings, and when banks fail, it can trigger economic catastrophe, like we saw in 2008. So the question became, if crypto platforms are going to offer bank-like services, shouldn't they face bank-like regulations? Grewal pushed back on this comparison. It's a very strange argument to say crypto is seeking to avoid regulation when we're pushing for legislation, he said. The Clarity Act would provide very clear, strict supervision of crypto. In many ways, it would be regulatory oversight for the very first time. He made another crucial point. When it comes to stablecoin deposits, these are backed dollar for dollar by short-term instruments, principally U.S. Treasuries. They're much more secure than the system at banks, where all sorts of systemic risks apply. In other words, crypto companies argued they should have different rules because they operate fundamentally differently than banks. They don't make risky loans, they don't leverage deposits, they simply hold digital assets backed by real money. But this debate was about more than just regulations. It was about the future of finance itself. Coinbase wasn't just a crypto exchange anymore. The company had ambitious plans. They were launching stock trading, allowing people to trade regular company shares alongside crypto. They were moving into prediction markets, where people could bet on future events. They were building AI advisory tools to help people make financial decisions. They were even creating business services for companies and developers. The vision was clear. Coinbase wanted to become an everything exchange, the primary financial account of the future, where Americans could do all their banking, investing, and money management in one place. We follow the demands of our customers, Grewal explained. They're saying they want an integrated option for trading, for basic financial services, for prediction markets, and other alternatives that allow them to think of their financial future in an integrated way. We think Coinbase can be that. This put Coinbase in direct competition with giants like J.P. Morgan, Bank of America, and Wells Fargo, but Grewal saw it differently. We're happy to compete with traditional banks and financial institutions, but we're also happy to partner with them where it makes sense. Critics raised another concern. What about rural America? What about people who depend on their local community banks for personal service, for home loans, for small business financing? If money floods into digital platforms, would small-town banks disappear? Would communities lose access to credit? Grewal had an answer ready. Rather than being forgotten, I think rural communities would actually be engaged for the very first time, he said. Stablecoins and crypto offer community banks a new way to engage with their customers. This actually strengthens their position in the community and offers greater services for their customers. He pointed out something important. Under the current legislation, community banks would get new powers for the first time in 27 years. They'd be able to compete in the crypto economy on a level playing field. It would expand their capabilities, not undermine them. Throughout the interview, one theme kept coming back: China. The Chinese have made it very clear they intend to see their currency, the yuan, displace the dollar as the currency of choice, Grewal warned. They're doing that in very innovative ways. They have a central bank digital currency. They're providing yield on that digital currency. They're making it very clear that if the U.S. doesn't seize this position of leadership, China is more than ready to step in. This wasn't a hypothetical threat.
China has been testing its digital yuan for years. They've been pushing it in international trade deals. They've been working with other countries to create payment systems that bypass the dollar entirely. If China succeeds, America loses more than just economic influence. We lose the ability to enforce sanctions. We lose the exorbitant privilege of printing the world's reserve currency. We face higher interest rates, more expensive government borrowing, and ultimately a lower standard of living. We think this would be a great mistake and a great loss for the American economy, Grewal said. That's why we think President Trump's vision is so important. So, where does the legislation stand now? After the White House meeting, there was cautious optimism. We're hopeful, Grewal said. The summit at the White House was important. Credit to the White House for convening the parties. There's work that remains to be done, but we saw the Senate move forward with its version. Once we get past some distractions, we're going to see a focus again on what matters, giving the American people sensible rules for crypto and a choice in their financial system. He made one more crucial point. Even if the Clarity Act doesn't pass immediately, current law already allows for stablecoin rewards under something called the Genius Act, which had already been signed into law. The Genius Act is the current law, he emphasized. It's very clear that rewards are available, and companies like Coinbase can offer them. But the new legislation would do much more. It would create federal oversight of crypto spot markets for the first time. It would clearly define which tokens fall under SEC jurisdiction and which fall under the Commodity Futures Trading Commission. It would protect decentralized finance systems. It would give consumers protection while fostering innovation. Here's what gets lost in all the technical jargon and political fighting. This is about real people's lives. More and more of our lives are moving online. We shop online, we work online, we socialize online, we entertain ourselves online. But our financial system is still largely stuck in the 20th century. Sending money internationally is slow and expensive. Opening a bank account requires paperwork and waiting. Getting a loan means pleading your case to a loan officer. Access to investment opportunities is limited by geography and wealth. Crypto promises to change that. It promises instant, low-cost transactions. It promises financial services accessible to anyone with a smartphone. It promises investment opportunities previously reserved for the wealthy. It promises a financial system built for the internet age. But none of that happens without clear rules, and clear rules don't happen when lobbyists are fighting to protect old business models. As Grewal wrapped up his interview, he brought it back to the fundamental choice facing America. Every day, all of us see that more of our life is moving online. We feel it in the way we interact with one another, with companies, with institutions, with our government. We think it's critical that there be a financial system that is ready for that purpose, a system that allows for smoother, less friction interactions when it comes to moving money on the internet. We think crypto can play an important part in that. The question is, will America lead this transformation, or will we let other countries, particularly China, define the future of digital finance? Will we create a regulatory framework that protects consumers while fostering innovation, or will we let lobbying interests preserve outdated business models at the expense of progress? Will we give Americans choice in their financial system, or will we force them to stick with the same old banks that have dominated for decades? These aren't easy questions. Both sides have legitimate concerns. Banks worry about stability. Crypto advocates worry about innovation. Consumers worry about safety. Everyone worries about China. But one thing is clear. The decision can't wait forever. Every day Washington delays is another day China gains ground. Every month without clear rules is another month of uncertainty holding back American innovation. That Tuesday morning meeting at the White House was just the beginning. The real work happens now in Congress as senators and representatives decide whether to move forward with the Clarity Act or let it die in committee. And the outcome will shape not just the crypto industry, but the entire future of American finance. The battle for America's financial future is happening right now in Washington, D.C., and every American has a stake in how it turns out.